Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest and friend in Mr. David Shirkey, who is a passive mobile home park investor. David is the director of strategy at Orbit Form, which is his family-owned manufacturing business. He has worked at Orbit Form for over 15 years in capacities including the CFO, project manager, engineer, and as a regional sales manager. He currently serves as Orbit Form's director of strategy, where he leads growth initiatives including new product lines, new services, new acquisitions, and other investments. Prior to joining Orbit Form, David worked at Chrysler as a manufacturing engineer and production supervisor in several Chrysler facilities across the U.S. David also leads the Shirkey family office, and as part of the family's second generation, his role within the family includes identifying and researching investment opportunities, tracking investments, financial reporting to the family, and others. David received his MBA from the University of Colorado in Boulder, and he received his BS/MS in mechanical engineering from Oakland University in Rochester, Michigan. David, thank you so much for coming on the show.
Hey, thank you very much, Andrew. That was a nice intro, and I'm glad to be here.
Awesome. Well, let's jump right into some questions. How did you find the mobile home park asset class, and what triggered you to start investing in the space?
Yeah, I had gotten into the alternative investment space in about 2017. And after meeting different people, I eventually met a guy named Jeremy Roll. And Jeremy kind of introduced the space to me as an idea. And after having made some investments in multifamily apartments and other real estate arenas, I kind of just started looking into the mobile home park space. And after I spent a couple hours and read a couple documents and watched a couple videos, back in 2017, I decided it was worth the further analysis. And now there's a lot more resources, than there was in 2017. But that's how I got started, just from a reference from another, alternative investor.
Very cool. Very cool. And how many mobile home park deals have you invested in to date?
So far, I actually brought a little map with me, and just to
awesome.
In case you asked that question, got a little map here.
Very cool.
So right now, 10 different investments.
Wow.
2 more are on the docket, for the near term, but so far 10. And one of those is a fund, and the rest are all direct, park syndications.
Okay. And would you mind touching on that? Do you prefer one or the other, the syndication or fund route, or do you invest in REITs? What's your preference?
I guess my preference is the single park or specific, maybe small portfolio investment versus a fund. I'm not anti-fund. I guess I wouldn't say I'm anti-fund. But maybe I'm a little more hands-on or a little more interested in the unique factors of a single MHP acquisition. But I think the funds are okay too.
Okay. And would you mind elaborating a little bit on that? Just because I think new people to the space might not understand the specifics. I guess maybe your hopes are that you can research a specific property, the tangible real estate and the market, and kind of make your own call on if it could be a home run or not, versus where in a fund, you're kind of just pooled in and, the operators make that decision. Or what do you like specific about the syndication route?
Well, I think at first, that's right. I wanted to dive into the details on each of the locations and each of the markets. But I think as I've gone along, now I'm just trying to work with trusted operators. Mm-hmm. And so, like, for example, Andrew, if you came out with a fund, I would probably consider it. because we've done some business together, and actually a sponsor that I've done some investing with in New York State is coming out with a fund right now, and probably going to seriously consider that because they're making a business decision to move their fundraising into that method. But I would say in the last 3 years, I've focused on the direct syndications just because I've been more of a hands-on investor and like to know the specifics of each investment.
Gotcha. Yeah, you've kind of made your own fund, right? Your fund of 10 properties or 10 investments, right?
I guess you could say that, which I don't think, I'm not sure most or all passive investors maybe can do that. I feel very blessed that I have maybe a little time and a little bit of, I may be able to put some attention to this, but I think a lot of passive investors, they might need to maybe pick one trusted operator or one trusted fund and kind of just deploy capital there.
Stick with
not
that.
Everybody can spend as much time maybe as I've been able to on the space.
Yeah, that makes a lot of sense. What does your due diligence process look like when you're, looking into a new operator?
Well, with a new operator, it would involve just I'd like to just talk to them, at first, don't do a whole lot of background checks or anything at first, just kind of talk and ask questions from different angles and see, if you ask a similar question over a couple different ways in a 30 or 60-minute phone call, it's just nice to hear how people answer kind of the same thing different ways. And then of course, you see who you're connected with. And you might ask for some referrals directly from the operator, but then you also just kind of reach out to people who you think probably are aware of them or know them. And I have never done an official background check. Like I've never done an official criminal background check. I haven't taken that route. But ask for referrals and call the referrals, and then just ask other people that you think might know them is a pretty good way. Obviously, if there's a track record that you can verify, that's very, very helpful. And I think now there's enough, kind of MHP operators who are raising money that do have track records that are looking for, $50, $100,000 investors that you can kind of vet them out and check them out. That's, probably the top of the process.
Totally. Yeah. Thank you for sharing that. When it comes to, a deal specific, like a syndication, would you mind going through maybe just the top things you look into, when you're presented with, the details or pro forma or offering memorandum?
Sure. Usually I just do a couple of the very well-known simple things, like you do the Walmart check or you do the fast food, check. Those are a couple of things to just see if it stands out, either pro or con. That's a good thing. And then I even sometimes will do like the look for apartments or look for homes for sale in the vicinity. And sometimes I've even called some realtors, because some of the locations, if it's a little bit more small townish or remote, there might not be a whole lot of listings online. But you can call a local realtor and ask if they know of any homes for lease or for rent. And it gives you a little signal on that market. Those are a couple of the steps I take. And then, there's higher level things like I think before I would even dive into things, if it's in like a litigious state, or if it's landlord unfriendly, you might just not really even dive too far into that analysis. And of course, this is all after I feel like I can trust the operator in the first place, because I think that's where I start, at least, is the person that you're kind of placing a bet on, and then after that's, after you're comfortable with that, then you start looking more at the actual location and the park makeup, and if you believe the operator can can improve the place or not, or if it's a stable versus a value add. You kind of, there's different things you got to analyze, for those different factors.
Totally. Yeah. And I mean, compared to, our kind of avatar investor, I would say most of them know a little bit about the space, but, I know that because I attended the same Frank and Dave boot camp that you did, I know that you are more hands-on, but I think your tips that you gave there, probably would take, a couple hours at most, but they could be very, very valuable. Calling a realtor, that is grown up and has a huge business in that town would be a great way to tell is there a need for affordable housing in this market? I mean, that's like, you can change a lot about a piece of real estate, right? But you can't really change the number of jobs that are available. So I love that. That's a good tip. Have you been involved in a mobile home park deal that went bad? And, if so, what went south?
So far, at least as far as I'm aware, none of them have gone really bad yet. It's funny, we happen to have an investment that happens to be one of your parks is very close to one of the parks I invested in as a passive investor. So that one is in a pretty rough town in the Midwest, and that's been the most interesting stories have come out of that park investment. But it really hasn't gone bad. It's just I think it's been a little bit harder for the operator than they had planned, but it's cash flowed, and I mean they're making distributions. They haven't had a capital call. I mean, so it's going okay.
Yeah, I wouldn't call that a bad deal. I mean, that's no. And I know the park you're referencing, so I can speak on behalf of that. But they bought it at a really good price. They, it's a rougher kind of park compared to, the typical park you'd like to see. But So honestly, I'm looking at my map here again that I showed you, and I don't no, none of those have really been a disaster yet. I have one multifamily apartment investment has had some trouble, but none of the mobile home park investments, at least as far as I know. Can you maybe shed some light on the multifamily one that went south, and just kind of what led up to that?
Sure. So I'm invested in 4 multifamily apartment deals, 2 different operators, and the one that's having challenges is near Houston, and I think it was a combination of. I think it's mostly this was this guy's second time being in the leadership role, like driving the bus, and I just think he might have got, it's like a 400 or 500 unit apartment, and I think he just a little over his head. So I think that was the main thing. I think he's just a little bigger than he was ready to handle, and then they have actually been getting quite a few. It was going a little bit shaky pre this spring, and then it seems like maybe he didn't have that good, or him and the management didn't have a very good relationship with the tenants. And so the tenants are really flexing their, what do you call it, that CDC CARES Act or the CDC rent thing. They're, and if you don't have a good relationship with your clients or tenants, I think you're going to have more of them are going to flex that ability. So
totally.
That's the current acute issue that's going on right there. But I think it's just a little over his head. Yeah.
What's your preferred communication? From your GPs that you partner with, do you have a preferred method? Do you, or what is, what are the great operators doing? And then what are the not so great operators doing on the communication side of things?
Sure. I'd say quarterly is more than enough. I mean, I think even if there was twice a year, 1-page report and maybe even just a quarterly email, just if anything major is going on, good or bad, that'd be good to know. But I think quarterly would be the most an operator should feel like they need to communicate. And yeah, I think even twice a year would be okay, unless there's just some surprise. If there's a surprise, I think bad news doesn't get better with age, and so you just want to get it out there and let people absorb it versus trying to surprise them after it's been building up for a while. It's a delicate balance because, once you're in, you're in. I mean, it's not like these are liquid markets, and so I think that's something that a lot of passive investors struggle with. Maybe is you send somebody a lot of money, but you have to realize that your decision's been made, and you probably don't have any means of changing the direction if you even wanted to, but based on the operating agreement and the structure. So I think it's just it's something that you learn after you make some investments. But again, fortunately, I haven't had any situations where I've even wanted to try to intervene or get in the way. But I think it's something you learn at going from maybe your job versus into a passive investment role.
Yeah, no, totally. What would you say, would be, a mistake that you made? It doesn't have to be a specific investment. Maybe it was a entity set up or maybe too big of an investment into an operator, with your first deal. What would you say on that question?
Okay. This is actually the same part that we were talking about before. I'm only going to invest when I really know and I can verify that mobile home parks are this operator's full-time deal. Like the park in Indiana that you and I are neighbors in, I just didn't have that as a filter, or I didn't do a good enough job. And those guys, this isn't their full-time deal. This is kind of like a side project for them to try to manage this park. And so I applaud their efforts because I know it's not their full-time job. But like someone like yourself, you've chosen to dedicate yourself to building a mobile home park enterprise, mobile home park ownership management enterprise. And so I didn't have that as a strong enough filter maybe when I did this
first one
investment.
Yeah.
Yep. So now I want to really know, is the person I'm trusting or counting on, is this like are they going to live, eat, and breathe the MHP world and this park in particular?
Yeah, that's a great filter there. Would you mind sharing, some more of those filters? Maybe just like the top few, because I think that's the golden nuggets that our listeners could really get value out of.
Okay. Well, that's one is just, do I really believe that I don't want to say their life depends on it, but their professional reputation, they're committed to becoming, to the MHP space would be one of the big filters. I guess after that, now you're getting down to some of the property attributes, or you're getting down to the operating agreement and deal structure. Again, everything's relative, but I really feel I have a hard time when some of the things these days they're getting like again, everything's relative, and I'm not trying to say that any people should get the terms they can get, but when it gets to be more than 50-50, between the LP and the GPs, I don't know, it just doesn't feel quite right to me, and I do like to see a preferred return. I like to see a path that the cash is going to kind of be going to the limited partners before a whole lot of upside comes back to the general partner. In general, there's fees and there's a lot of work that goes into the front side of these deals, and so there's a market for for fees and acquisition fees and management fees. But I do like to see a good proportion of the cash flow going to limited partners before the general partner hits their big, hits their big win on their side.
Sure. Yeah.
If
That makes sense. Yeah, totally.
But one thing that's unique, people might be interested is, there's a lot fewer really good, experienced mobile home park operators that are raising money from passive investors than there are multifamily apartment building, operators and syndicators. So people who have a good operators in the MHP space, they hold a lot of cards in this arena. And so I think it's just a reality of investing in the space.
It really is. And, I had a call yesterday with a gentleman that, said, hey, I got $500,000 and I want to invest it before the end of the year. I need depreciation. And it's like, you got a timeline there that he's trying to, save on some taxes. Yeah. Would you shed some light on the depreciation benefits you've seen through your investments and, how on your mobile home park investments and how they measure up compared to other asset classes?
Sure. Well, one of the things, some mobile home parks definitely have, some depreciation. I guess I have a lot of variety of things that I've invested in. And like when I compare the depreciation we might get from investing in a business that has a lot of capital equipment, that's like ultimate, depreciation in today's, tax world. Like we can write off 100% of that stuff. And then when it comes to the MHP space, depending on, what's involved in the park, whether it's got, valuable infrastructure and things that are park owned. I look at a mobile home park as usually being able to write off 25 to 40% maybe of the investment in the first year. And then it that's kind of probably my rule of thumb, which is great. But I wouldn't say I look at MHPs as like the ultimate tax shelter. Mm-hmm. But it's a good tax shelter. Other spaces where you have more I guess more hard costs. You have buildings and you have but MHPs sometimes you have less of that versus the total purchase cost from my perspective.
Sure. Yeah. And
you agree? Do you agree or?
No, I agree. I mean, I guess I've not been in the buying, existing manufacturing businesses. I'm sure that depreciation is a lot different, but it's just always interesting to me to kind of compare how mobile home parks measure up, to
Sure.
To other options out there. So, but yeah, this specific investor that reached out to me, one of his filters was that he required the deal that he invests in that they get a cost segregation study done.
Oh, sure.
And we get those done every year, but that was like a filter that he made sure to check off the list because, for their bonus depreciation, benefit, either he writes a check to the IRS or he, writes a check to make an investment. So that was a interesting conversation because, some people invest strictly on the depreciation, expectations.
Yeah. So. And that makes a lot of sense. But I mean, I'm sure this investor also, the first filter is, do they believe in the investment?
Sure. And the operator.
How does it rank? How does it rank in their, tax mitigation plan?
Oh, but
definitely. I think people need to be careful about not just looking at the depreciation factor. Like, I mean, you can go out and invest in all kinds of oil drilling operations and mines, and man, you'll get a ton of depreciation. But man, you better be careful that it might not pay off down the road.
Yeah, totally. And I know you. We talked once about the ATM investing and the depreciation available there, and how that has been a pretty good investment, from our previous conversation. Would you mind sharing a little bit about that and maybe, sharing just some other, alternative investments that, people looking at mobile home parks should also be looking at?
Okay. Well, it's been pretty interesting because, back in 2017, when I kind of made some of my first in alternative investments and deployed capital for our overall family. ATM portfolios were one of the first things I got involved in. And man, people thought I was crazy for years. But then some people that like in 2020, have launched funds for the same ATM portfolio deals that I told them about in 2017. And so I really enjoyed that a lot. I mean, I'm glad because it kind of makes you feel good. People you respect kind of, but that's been kind of neat to see. And so, in fact, I think there's a couple of well-known alternative investment syndicators that like the only thing they brought out in 2020 is the ATM funds, because they're spooked that other asset classes are priced too high and cap rates are too low and that kind of thing. So that's one that's been kind of interesting. I don't want to bore anybody, but on the other side of the coin, I invested in some check cashing machines, and it's kind of akin to the ATM investment. You do get really, really great initial depreciation because it's a machine. It's capital equipment. You can write off 100% of it first year. And it also involves, people transacting for cash. Anyway, I don't want to bore you with that story, but
no, that's great. That's the kind of stuff that people don't initially think of when they think of making a passive investment.
Sure. And then a couple of other interesting things, at least from my perspective. I've got some cryptocurrency investments. And then something called life settlements. It's kind of different, where you're buying the death benefit of other people's life insurance policies. So that's a whole other rabbit trail. But again, if you're looking for things that are not correlated to the stock market or GDP or inflation, which the mobile home park space kind of has some of those characteristics. That's why like things like life settlements have been on my radar screen, and ATMs.
That's awesome. Thank you for sharing those. I appreciate that. So what matters, going back to mobile home parks, what matters most to you, when you make an investment? Like if you were going to boil it down to maybe one or two things, what matters most prior to you, agreeing to make an investment?
Well, I mean, it's kind of a cliche, but I mean, what matters most is, do I believe in the person that I think is most important to deal with all the unknowns that might arise? That's by far the main thing. Do I know who the person is, and do I believe that they're gonna do their best when bad things happen or when good things happen? Because the good things could happen, and they might try to hide it. They might try to they might try to shelter some of the findings or something, some of the positives. So I think that's by far the main thing. I mean, I think after that, I've already kind of decided what spaces to look at. I mean, the spaces that I'm open for are MHP, multifamily. Those are pretty much the only two that for passive investing I'm really looking at in these days. I mean, I'd be open to an industrial or warehouse, real estate investment, but I just haven't cultivated relationships in that arena, right? To this extent. And then we also have, like you mentioned, we buy manufacturing businesses, but that's more of not so passive. That's more of active investing. That's our main business. But those are the only things that I'm really open to right now. Operating companies, mobile home parks, and multifamily apartment buildings.
Very cool. Let's see here. I just had a few more questions. When you invest, do you guys, choose to invest like through an entity or personally, or, for someone that wants to make their first investment in the space, would you have any sort of, obviously, you're not an attorney, but what would you kind of What did you do so that maybe someone can learn from that?
Sure. The majority of our investments have been either through a holding company, LLC, or through a family trust. And the only real difference is, again, I don't want to bore you, but some people might be interested. I mean, the only difference is that the family trust was set up basically to help us reduce the tax liability when my parents, pass away. And so that, but it's really the same. It's really the same. They both have, I'm not really sure. I don't really know if the trust has any liability protection necessarily, honestly. But the LLC method certainly does. And plus it just kind of, I think it's helpful. Like I'm managing investments for not just myself, but others in our family. And so I can be the manager of an LLC holding company, and then I can make all the decisions, and I can sign documents, and I can, do certain things like that. And it helps to organize the holdings. So that would be.
Yeah. No, thank you for sharing that. David, what other important things should passive investors know about the mobile home park asset class that I didn't mention?
Well, I guess, one of the things I thought it might be interesting to talk about is like, if you're interested in the space, like what do you do to start? Like, what do you do to start learning about it? Because probably for a lot of people, they don't have a whole lot of knowledge or awareness of mobile home parks before they start investing. I think your podcast, you're putting out a lot of pretty valuable content for people to learn, and like the due diligence checklist that you offer on your podcast is really invaluable for folks. And then I guess it just depends how serious they're going to be about it, because if they're, depending on their level of investment, I mean, maybe to them, some people, investing $50,000 is like a really, really, really big deal. And some people, 5 million might be a really, really, really big deal. And so whatever that is for each investor, we got to decide, am I really going to evaluate Andrew Keel from 360 degrees? Am I going to try to figure out who this guy is, or am I just going to roll the dice? And so that might be, again, I don't want to say what their best method is, but I'm open for people, if they wanted to ask me for my thoughts, I'd be open to sharing, how I went about researching the space. But honestly, starting with just listening to some of the well-known podcasts, and now you have this one, so people could listen to yours and some others, and that would probably be a really, really good starting place.
Awesome. And last question. How could people find operators to invest through? I know that you spent quite a bit of time on this to find these operators in the mobile home park space, because like you said, there's not as many of them in the MHP space compared to multifamily and other asset classes. So would you mind just sharing a couple of those ways that you found different operators?
You can kind of find some lists. I don't have it on top of my mind right now, but I know there's some ways to get like lists of top 100 operators, mobile home park operators, and I would say you start looking for the ones that maybe don't look like they're too huge. Like look for operators that have between 1 and 10 parks that they currently own or manage, and some of them might have websites that have investor questionnaires on their websites. A lot of them won't. And depending on how intense you want to be about this, maybe sign up for the groups that do have the questionnaires for investors and see what you can learn. And then email and call some of the ones that don't, and just state your interest and ask if, do you ever raise money for acquisitions from passive investors? There's not really a clearinghouse, I wouldn't say. I mean, I guess there's some social media groups that you could probably join on LinkedIn and Facebook, and maybe just watch what's going on. Like some people, you're going to laugh, but some people, they'll be posting things with their biceps showing and their stars flying and dynamite shooting all around, and it's kind of like, well, maybe I won't call that guy, but maybe there's some people that are answering questions humbly, but aren't promoting their close their next under contract deal, every third day. But honestly, I think people who are producing podcasts, people who are being interviewed on podcasts, people who are interacting on social media, like those things, they're not doing it because they're like closed-minded. They're doing it because they're open to meeting people and talking. So, you might need to give up a couple of hours of your time to ask some people to talk with you, but you can make some inroads.
Totally. That is a golden nugget right there. David, thank you so much for adding.
Especially the fireworks, right?
The fireworks, that I did see that video. But David, thank you so much for adding value to our listeners and coming on the show. If any of our listeners would like to get a hold of you, what would be the best way for them to do that?
Well, like I said, I'm open to help people out. You can put my email address in the show notes if you want, but it's just dshirkey@orbitforum.com. I'm pretty easy to find on LinkedIn. And happy to, I like talking about this topic. And so I'm happy to help people. And, you help somebody and who knows, they're probably going to share a deal with you down the road too. So happy to do that.
Awesome. Well, thanks again, David. That's it for today's show. Thank you all so much for joining us.
All right. See you, Andrew.
Hey, are you getting value out of this show? If so, would you mind please going over to iTunes and leaving the show a quick 5-star review? I have a goal of hitting over 100 5-star reviews by the end of 2021, and it would mean the absolute world to me if you could help contribute to that. Thanks ahead of time for making my day with your 5-star review of the show.